Good morning, traders, and happy Friday. Welcome to the showdown. If you guys are brand new, go ahead and click the subscribe button and like this video. In this video, we're going to go ahead and do some breakdown analysis and do some live trading. I have your favorite guest, FxBigDog, joining us, and we're going to get right to it after this. All right, welcome back. Welcome back. Good morning, FxBigDog. Are you awake this morning?
I am ready to rock and roll, Cameron, to fight this battle. You know what? This is a war that only the strongest will survive. This year, traders, it has been an absolute crazy, crazy week. All right. The markets have been doing a lot of manipulation this week, and so it's important to pay attention to the details. The one thing that we've been teaching here at Traders Network Club is be able to identify market direction. And remember, I've mentioned this a few times. If you follow me on my Instagram channel, I've said that there's 4 reasons why the market moves. The market looks to create liquidity, hunt liquidity, rebalance equilibrium, and rebalance insufficiency. If you can understand what is it that if you can understand the market direction by understanding those 4 rules, you can become a better trader and start understanding exactly what price is trying to do. And so we know that the market is always going to chase after liquidity. It's a known fact. Whether it's insufficiency, whether it's buy stops, sell stops, there's going to be a price move towards these levels. And so we've just got to take the external model and make sure that the internal model is lining up with the external model, and then we've got a good trade setup. And sometimes it takes a little bit of patience. Sometimes it takes patience to wait for these setups to develop. And that's why we look at a cost averaging trading approach, so that we can be wrong but still right, because it is very, even novice, well, let's put it this way, even experienced traders struggle to be able to be exactly right all the time. All right. And so when you do swing trading, you're placing stop losses, you got to make sure that your risk reward ratios are really good, that you're chasing after 1 to 4, 1 to 8 risk reward ratio. Because if you're not, and you got a 40% strike rate because you're getting 60% wrong all the time, even 40% right with a good risk reward ratio is going to give you a profitable account. Now, if you can get better at identifying market direction and where price is going to manipulate above these highs and lows, or these insufficiency areas, then it becomes that you might be 50 or 60% right. And if with a higher risk reward ratio, you're going to see larger profits as well. So it is a fine. Not everyone can do it, I understand. But what we do here at Traders Network Club, we try and make it as simple as possible. So we identify buyers, we then enter the market, we place in cost average, but it's with high probability. We're looking at high probability setups, and we're identifying a trading opportunity. Now, are we going to be right all the time? Never have we said that we're going to be right all the time. And to be honest with you, it's very arrogant to think that you will be right all the time, because it doesn't happen. All right. You're going to get beat up and spit out if you don't understand that price action is going to move where it wants to move, and you may not get it right all the time. So, what we're going to do today is, and we do this in all our live sessions, we make sure that traders understand, when we're looking for a trade setup, we're not saying that we're right all the time, but we're saying that if we're wrong, we have a plan. All right, we have a backup, and what we do is we cost average into that position, knowing that we have the right bias, but maybe not the perfect entry. All right, maybe not the perfect entry, because remember, traders, we're putting on a spot today. We place trades right now. We don't say, all right, I want to wait a couple of hours for the setup to develop. We take the bias and we say, well, price can move to this level, or price can move to that level. And what we do is we say, all right, I'm okay shorting or longing that particular pair, because I expect price to continue to move in that direction, even though we might have a short manipulation move and then go ahead and move into that area. All right. So let's go ahead and dive into it today. And I'm going to talk about the Dow remote that is available inside our VIP trading platform. Make sure you stick around to the end. I'm going to tell you how you can get involved in our DAO remote setups. We're going to talk a little bit about that, give you some information about that. Traders, you got to get into the live sessions. I've said it once, I'm saying it 100 times. Cameron is absolutely killing it. All right. This guy has been involved in trading for a while, but he's absolutely got the knack for technical analysis. He gets the and you'll see today. Trust me, you'll see today that he is going to knock it out the park. Now I'm fighting against a fierce component. All right, and that is Cameron. All right, so he is an extreme fighter. All right, one of those extreme fighters. So this is going to be a battle today. Let's see who can pick up the right trade. Let's see who can get this thing on the road today with some good setups. With that being said, Mr. Smiley, let's go ahead and take a look and see what's going on. You have the option as the youngster in the group here to go ahead and fire away at the first trade.
All right. Well, first thing is let's take a look at our dashboard and let's see what we have available for this morning. So looks like we do have four positions that we're holding shorts on the US dollar CAD. So that won't be available today. And as for the CAD Swiss as well, as we're holding some buys on the CAD Swiss. Okay. So looking at this, we only got three pairs to go ahead and trade. So looking at the US dollar CAD just for a directional bias, as want to see how the US dollar CAD is, how its price is moving right now. We can see that we had a market structure shift here. Okay. I'm looking at the daily right now. I want to look at this external model here. And as for those that aren't VIP members, if you don't know why I look at the external model, it's because we dollar cost average. And because we dollar cost average, I'm looking for price. I'm looking to get in where price is hunting liquidity, not running stops and looking for internal liquidity, right? So we want to look for the expansion moves as we dollar cost average. We don't want to be adding more positions when price is just running buy and sell stops. So here's the external higher. But what we had accumulation here. We had price come back here, run through these internal highs, and then we had now this expansion move to the downside. This indicates that we see a change in character. So what I'm looking for is how price retests back to this range. We had this weekly order block that was playing as support, and now price has what? Displaced through this key area. Coming back to retest it now as a key area of resistance. So not only that, if we zoom in a little bit here and we look at the daily, we can see on the daily we also have this bearish order block that price retraced to as well. This to me is a run of sitting buy stops in this area. Okay, now I've mentioned to my VIP members there is a reason for price to move higher to get a rebalance of this price leg, where we want to see price work to equilibrium, where we also have more insufficiency as well. Okay, the price will run to this to rebalance and grab internal liquidity. So there is a reason that price wants to move higher, but most importantly, I am bearish looking at this external and seeing all this rest and generate liquidity here. Okay, I want to see this low resistance liquidity run to be where price runs through all this liquidity. Okay, and we possibly could continue to move lower here on the US dollar CAD. So if we go to the Euro US dollar, if my direction on the US dollar CAD is bearish, most likely, most of the time, I'm going to be looking for a bullish setup here on the Euro US dollar. So let's take a look here and let's see if it aligns with our bias with the US dollar CAD. So once again, buy side of the curve, we came to this area of buy side. We have now swept buy side, but there is an external range sitting higher. We have more order flow to push price higher. Well, let's see. If price runs back here and we get a run of internal liquidity, that is a grab of liquidity that will push price higher. So let's go ahead and look at this internal model here. And let's say, okay, what did price do? Well, we had a retracement back to a bullish order block. Price is now respecting that bullish order block. But what is price also doing here? It's respecting this breaker. We had price run up and run up to this breaker, okay, this bearish breaker where we saw price displace. So this can confirm that we might be shifting a little bit here on the Euro US dollar. This external model might not come in play until we run more sell side liquidity because we're starting to see a change of character in this price action. So what I want to see now is that I'm going to probably see price work its way back up here. maybe even sweep another internal high or just retest this breaker and then continue to move lower where we want to see our standard deviation start becoming a key area of price that price wants to draw to. Okay, because what do we use standard deviation is it's once we get an external high or low taken buy side or sell side, right? Once we get that swept, then we have another internal manipulation. This high and low is a manipulation that we project where price wants to move to. And usually I'm looking for that negative 2.5, which is sitting at the key area of insufficiency. So let's zoom out a little bit more here at the weekly. Okay. And you're looking at the weekly. Okay. Um, you're on the weekly. We don't have much internal looks at this model. But what we do see is price just running to obviously this bullish order block here and rejecting. So once again, the Euro US dollar CAD is not really showing us ideally where it wants to move yet. We're right now building structure to give us more confluence of what price actually wants to do. But if I had to take a guess this morning and not wait for structure to actually tell me where price wants to move, I'm expecting this breaker will continue to hold, and I would want to see price continue to run to more internal liquidity. So I think because this was respected, I want to see my standard deviation become an area where price wants to draw to. So I might be actually bearish here on the Euro US dollar, um, by the looks of this model right now. So if we go back to the US dollar CAD, that might give us more confirmation that we might retrace a little bit higher here because there is more internal liquidity. So I think we're going to get on the US dollar CAD and the Euro US dollar. I think we're going to get more run of internal liquidity. Price is going to be running more stops on that expansion that we had on both of these pairs. And once we get this run of stops, then there could be a setup for price to now expand and continuate to obviously where the trend was moving. So I think this is not to me the external model year that I'm trading. I'm going to be trading the internal model year, and I'm going to say, okay, I want price to continue to run lower to this internal liquidity, and I might be bearish on the euro US dollar.
Yeah, and you know what? We are currently at the moment right now, we are short on US dollar CAD. So if you're going to be short euro US dollar of that, and you say it's just going to be a short term move, listen, traders, if you didn't know already that the Dow's testing. I'm going to go show my charts in a minute here, but the Dow's testing a lot of resistance. But go ahead and put that trading cam, and I'll go grab the next one right here that's coming on. And so, even though we're short on US dollar CAD, traders, you got to realize that even though we're short, if you take a look over here on the Dow, all right, think about it this way. US dollar, euro US dollar is actually both risk off currencies, right? Euro is a risk off, and so is which is a safe haven, right? Sorry, not risk off, yeah, risk off because it's safe haven. So we've got safe haven currencies, right? Safe haven currencies are the euro and the US dollar. So when we trading in sort of a risk on risk off trading environment, that pair that pair is battling amongst each other because they're both going to be bearish or both going to be bullish on a risk on or risk off trading environment. So it comes back down to what's actually been said in that actual country. We know that we've got inflation numbers. We know the Feds are looking to cut interest rate 25 basis point next week. So all of these things are going to play a role. The thing here is that when you look at the chart right here, we notice that the market's trading in a fair value gap here on the Dow. Now, this is what we're trying to do. We're trying to establish risk on, risk off. And so because we're inside this fair value gap, we know that the market can probably want to push up a higher right here. And it's currently testing this fair value gap here sitting inside. So we've got a fair value gap here. And then we've got a breaker block sitting right here. I've actually marked it wrong. This is a breaker block sitting in this area, coming off this area right here. In fact, if I go to the daily right here, you can see a little bit better. There you can see right here, we have a fair value gap sitting over here. And then there is the fair value gap sitting over there on the 4 hours. So we've got a big fair value gap. We've got a 4 hour fair value gap sitting over here. So there's a lot of resistance taking place over here at the moment right now. Now, we got a little bit of downside push, not enough. So it looks like the market's still trading what we call the fade the gap move in the short term. But if I move this down to a lower time frame, this is the internal model that we have to look at right here. We see that the market's created accumulation, and now we're seeing a manipulation move towards a fair value gap. And so we're expecting the market then to go ahead and sell off. Expecting, does it have to? No. Do we believe that it's going to based on this model? Yes, we do. And so right now, risk off on the Dow. Risk off means that we're expecting Dow to go back down, sweep the lows over here because there's resting liquidity sitting over here, risking sell stops sitting over here. And so we're expecting price to come back down to fill these orders. So this is the thing. In today's trading, can be a little bit manipulative, right? Because of the fact that we're looking at this sort of risk on, risk off approach. And so I'm going to go now to Aussie CAD, and I'm going to take a look at Aussie CAD right here, looking and understanding what's going on in the market here. I'm going to look at the Aussie CAD now. For those that probably been following me in my trade ideas, I've been short on Aussie CAD, and I was short because price was down here. We had a big push to the upside. We're currently holding 4 positions on Aussie CAD, sell positions. But now that the market's gone ahead and displaced above here, we broke through the trend line. Look at the model. All right, this is the model that's actually holding. Now, the reason why I was short because we were trading below here, I shorted the market because we did not sweep the low right here. And I still see that as a draw of liquidity, but the model has changed. We've moved to sell from the sell side of the curve into now the buy side of the curve. And we can see here we've actually taken out that high. That is huge right there. So which means that we're probably going to chase after the high up here. Now, the saving grace is that I don't expect this to just go up in one big sweep. I'm expecting the market to create some internal structure right here. So though I'm probably on the wrong side of the curve here on the Aussie CAD, I'm looking at the Dow right now. I'm thinking Dow's going to be risk off, right? If it's going to be risk off, that means the Canadian dollar should be selling, and so is the Aussie dollar selling. So both of these currencies, just like the euro US dollar, right? They're both safe havens, where the Aussie CAD are both risk on currencies, all right? And so there's going to be a battle between that. Now I've got to go to the internal model right here, and I've got to establish what is the market doing. How do we understand what price is trying to do? And the one thing that me and Cameron, we sat for about 3 hours busy going through this stuff here yesterday. And the one thing that we, because we always talk strategy, we always talk new ways to identify market direction, and we test ourselves, we test each other in these type of things. But if you look over here, we didn't take out the low, which means that this is becoming for me a wave structure right here. So we got a nice little 8-6 bounce there. Price goes to the 1.618, so which means that we're looking at the 1 point because the market blew through this. We had a market structure change, and we're looking at this area right here to be now a support level. Now, what I'm going to do here is I'm going to look at this area, and I'm going to look for things that could hold the market at that point. So now if I go closer in, I'm going to draw in closer to the market right here, and I'm going to look over here, and I'm going to say, if this is a wave 1, right? If this is wave 1, and let me get my wave structure sitting over here. So we've got wave 1, wave 2, we've got wave 3 up here at the top, all right? Now we're looking for price to draw back down to give us a wave 4 and then wave 5. So we do expect price to continue to move. Now, as price comes down here, there's 2 things that are holding price up. Look at this. We have this trend line right, this resistance here from the 1.6 rate. But then also over here, if you take a look over here, look at this insufficiency right there. So we've got insufficiency sitting right at this point. You can see why prices bounce back up, all right? Now, we did go through also and test this. Look at here. We've got insufficiency sitting over here. So we've got the market pushing through. It failed to push through this area. Now, always look at my 4th wave to be here. Now, remember, this is one thing that's key. This is a 4th wave structure, okay? And so I look at this and I go, there might be something a little bit further down. We may see an internal move to the downside. So we've got to make sure that we're blowing through PD arrays, bearish PD arrays, in order for us to continue to move north. If we have bearish PD arrays that are holding the market from going higher, then our internal model is going to be something like this. And this can happen with a fourth wave move. We can see the market doing something like this. Sweep the lows, then start with that bullish rally. All right. Now, there's two ways, there's two patterns that can appear in a corrective move. All right. There is what we call irregular flat pattern, and we have, of course, zigzag. So a zigzag will look like something like this. But don't be mistaken. If the market goes ahead and tests the high up here, gets to the 2.618 right here, what we could also encounter is a irregular flat where price does this, fails to break above, all right, or stay above, all right. We have displacement, but it doesn't stay above there, and then comes back in here, and then the target is going to be here. So liquidity draw is going to be back down here. It doesn't mean we've changed structure. It just means that we've got inducement taking place. What is inducement? It's the market inducing sellers to get into the market, but what price does is pushes back up again. And so these are the type of structures. Now, how do we know that things are going to work out? Well, straight away, the first thing I'm going to look at is PDRA is going down south. So right here, I see we have an order block sitting right here. Now, I'm going to be honest with you. Me and Cameron have a debate about this before, and I'm going to say that although we have a order block sitting over here, a bearish, there we go, not breaker block, but order block. So we have a bearish 1 hour order block sitting over here. I see this right here, that price already has gone ahead and tested that order block, right? As price pushes. So this becomes for me a low probability order block, all right? And so, but I'm going to be watching this. If I see, now this is going to be the sign. The sign for me would be that if this hourly candle does not break and close above the previous candle, then that means that we're running out of momentum. And if that happens, then there's a good chance that price is going to go ahead and trace after this area right here. And the reason why I say that is because it sets up, in my opinion, just like candle theory, right? Candle range theory, all right, CTR, where price creates this accumulation. I call it accumulation because this is how it basically builds out. It's not actual accumulation, but it's a candle range, right? So we've got, and I call this accumulation. I look at this as manipulation, and then I look at this as distribution back down here. So if you go down to an internal structure, you may be able to find something like this developing here in an internal, much lower down, lower time frame. But this is the sign right here on this candle. So I'm going to watching this, and it's important, traders, because when you're looking at sort of sell models and buy models, normally manipulation moves into higher time frame PDRAs, right? When you see a higher time frame, or at least when you see a lower time frame move into a higher time frame PDRA, and you've seen accumulation before that manipulation move, you're expecting that to be a sell model or a buy model. That's how it sets up. So just as an example, this is how it works. You have accumulation, price does this, then you see price manipulating. Price has got to come to a larger time frame PDRA, sitting over here. It could be an order block, fair value gap, sitting over here. And then it turns from this point, we see a market structure change, and then you see price distributing. That is a buy model sitting up there, okay? This is the type of maker model that you're looking for when you're looking to trade it. And again, you got to look at the market structure, right? If you got the market doing something like this, and it's in a fourth wave structure right here, and the market starts going into sideways range, then what I would look for right here is there any PDRA, bullish PDRA sitting over here that could create this manipulative move right here, and then create my buy model, because now we move to the south side of the curve, we see a market structure shift, and then we see price distributing, all right? That's what I'm looking for right here in order to be able to understand where is it time to start buying. Listen here, traders. If you're going to try and buy and sell inside this consolidation, right, that's what we call the dumb money. That's where they get beat up and you get ripped to pieces. It's the smart money that's waiting for price to move back into that buy model setup and then start moving back up. We also call it a nice turtle soup. Turtle soup is where price goes ahead and consolidates, moves down to a PDRA, pushes out. We've got your buy model setting up, turtle soup, and it's off to the races. All right. So this is the models that you look at. And so to me, when I'm trying to establish sort of direction, this is the candle right here. Now, you might be saying, well, Big Dog, you're speaking a lot because you're probably trying to wait for this candle to close out so you can get a perfect entry point. All right. But I'm not going to go ahead and wait for this candle to close out because Cameron's going to say, Big Dog, you got to put your trade in now, buddy. Come on. Stop talking yourself out of this trade. So what I'm going to do here is I'm going to move down to the low time frame. I'm really going to get nitty gritty on this. And then what I'm looking for right here is I'm looking for that structure. And I'm starting to see here that we had a internal, this is a 1 minute, believe it or not. We had consolidation right here. Look how price breaks out here, all right? We break out, we sweep liquidity. Wow. So we have price moving to the south side of the curve, and then we go back in distribution. So we had accumulation, price sweeps this liquidity right here, then moves back up north. Perfect model, right? And so I'm looking at this as a distribution move. And so now I'm going to move to the 15-minute time frame because we just closed out the candle. All right, see this candle closed out right here below the previous high. So I'm going to sell. Cameron, sell Canadian, Aussie Canadian. All right. Now, the reason I'm selling is because I'm getting price manipulation right here. If you look over here, you see accumulation, price manipulation right here. We have an order block sitting over here at the top. Price is showing a little bit of less volume sitting there. And so I'm expecting price to drop back down to this area. And that is the distribution target. And that target is sitting at 91.32. And we are currently trading at, what is the price at here? Sorry, did I get the right price there? 91.13, sorry, 91.13. So price is at 91.20. That's at least a 7-pip drop, and the market's going to come back to retest this order block right here. So we could probably see price drop down to 91.7 in the short term. That gives me a 13-pip move, not a lot. But if I go to the 1 hour time frame, if that 1 hour time frame closes out, and we see price closing out with rejection right here, or respect of this order block, then the target's going to be back down here to the south side, which is going to be at 90.96. Let's see how that works out. Now, that's a lot of information. Hopefully, you guys took it all in, all right, because we're all about education here. Now, traders, another thing that you have to take in, all right, is that when trading, you got to absolutely find the right broker. I want to go ahead and thank our sponsors, ACAP, for sponsoring this video, these series of videos that we do. We want to thank them for our sponsorship. We're going to talk about them a little bit more later. All right, guys, if you're looking for a broker, check out ACAP. They're out in Australia, regulated broker, great spreads, great company, great people to work with. And the best of all is they give us a lot of support on the things that we're doing. So, if you're looking to get involved in any one of our products, all right, if you're looking to get in any one of our products, and we've got a whole bunch of products right here, we're going to be talking about the Dow in a minute right here. But if you want to get into any one of our products, I'll show you how to get into this as well, and how to be able to get to and subscribe to a Dow. Just as an example, the Dow remote, all right? Dow remote that's taking place inside the live trading sessions, all right? If you're looking to get involved there, just go to our VIP right here. Click onto VIP members here. So click into members, click onto VIP. You get to this right here. Check out the video, but then click on the link here. And it'll pop open this page right here, and you can see all our different levels of membership here. And then if you actually go ahead and take a look at our results, here is our results that's taking place in the live session. This is our Dow remote. We're looking at 16 currency pairs. And check it out, traders. We are absolutely killing it. Or should I say, Cameron is absolutely killing it. All right. These are the results that we're getting inside the live trading room. Traders, if you're not checking out the Dow, check it out. See if it works out. Sign up for a month. If it doesn't work out for you, no hard feelings. It's a month-to-month subscription, not a year subscription. Month-to-month. It's not a long commitment. Check it out. If it's going to help you to improve your results, and everyone's looking to improve the results, check out the Dow remote. It's absolutely killing it. All right. So check it out, traders. And then, of course, if you sign up with ACAP, Open up a $10,000 trading account. This is the thing. Open up a $10,000 trading account, but use our link. All right, use our link to open up a live trading account, and you can get that link here inside the area right here. You see the preferred broker right here. Click on that. If you open up a live trading account with a cap with $10,000 or more, in fact, if you open up at $3,000, we can give you a discount. If you open up $5,000, we can give you a discount. If you open up $10,000, you can get a discount. What is the discount? You get these products absolutely zero cost for a whole year with a $10,000 deposit. So open up a $10,000 trading account with ACAP, use our link, and we will give you free access to these products for a whole year. Traders, you got nothing to lose, only to gain. All right, only to gain. All right. Now, if anything, you gain experience, you gain learning, and you get involved in the live trading sessions, and you get to learn a little bit of what Cameron does and how he teaches the students how to trade this market. So, with that being said, traders, let's move on to the next currency pair.
All right. Oh, all right.
Which one are you looking at now, Cam?
So I believe we only have the New Zealand CAD available now.
All right, sweet like a lemon.
So, what I do is I also like to look at the Aussie CAD and kind of correlate with the New Zealand CAD and have the same kind of bias, right? So I'm gonna play a little devil's advocate here, and and you said you took a sell, right?
Yes, I
And
sold.
you go more aggressive for the internal liquidity grab here.
Yeah, yep.
As I've mentioned, I like to always look for the external setup first because obviously we dollar cost average, and I want to be trading with price hunting the liquidity. So Aussie CAD, I just want to get a bias, a directional bias here to go ahead and match my bias with the New Zealand CAD. So right now on the Aussie CAD, looking at the daily, we've continued to be on the buy side of the curve here. If we take a look at the weekly, this would be the external range. We're continuing to move on the buy side of the curve. We had our market structure shift here, okay, with some displacement, create insufficiency with that displacement, and guess what? Price respected that. That's a check for bullish sentiment. Continued to displace again. Insufficiency, price again respected it. We did create more insufficiency here, so I can see price want to go ahead and run lower for internal grab for this insufficiency in this area. We can see it price run lower. But if I go ahead and I look here with the external model, what do we have here on the daily? Price displaced above this order block. We're now running to this order flow right here where price can reject and maybe want to run lower. So if I go the 4 hour, let's take a look at the 4 hour here, and we're looking for 20 net pips here. Here's a little bit more confluence here. Here's this displacement here above this order block that price was respecting. You can see this was respected, and here we see displacement through this area. Okay, so right now we create insufficiency in this area. Price is now respecting this area. We can see it continue to run lower, take internal lows, and maybe even come back here and have a candle wick run some sell stops in this order block. So there is that chance of that internal liquidity grab. But I am going to be trading with the external. I'm very bullish right now on the Aussie CAD on the external model. So let's see if I look at the New Zealand CAD and if it lines up with my bullish bias. So here on the New Zealand CAD, let's go back to the daily here. We're on the buy side of the curve. Here's the turtle soup that I was telling our VIP members when price was up here. I said we're going to look for price to come back to rebalance equilibrium, but this is not more important. This insufficiency that we ran and displaced above all this generated liquidity, this created insufficiency that there's now sitting internal liquidity, and price will come back there to this internal liquidity to go and push price to the external. So here we are. We've now swept to this external liquidity. We've swept our area of sell stops. Then I go to the 4 hour, and here we have more confirmation displacement through what? This order block that was respected. Price rejected, came back down, we displaced through it. So this now is looking for an internal. This is now looking for a retracement to insufficiency because this is the displacement through these key areas. This created insufficiency. So what we're going to see is possibly a little bit of retracement in this area of insufficiency, okay, right here. And here we also have an order block, so price could run a little bit lower and then continue to run higher. So there is a little bit of a short-term retracement, but once again, the external is very bullish for me. So like I mentioned to you, I like to trade with the external. If we continue to move here for this internal grab, I'm okay with adding one more position. This is about 22 pips to this order block. So yeah, we might get in one position and then price runs and continues to displace higher. That's where we want to be on the side of the trade. Okay, so I'm going to be buying here on the New Zealand cat.
Man, I tell you something. Um, you know, after Cameron had gone and broken down the chart there's one thing that I didn't look at here, and so Cameron's absolutely right on the money in this one, and I'm okay saying I got this one wrong, and I think I got the Aussie CAD wrong. I'll tell you why. Because exactly what Cameron just said right there, the external model is still bullish, right? And if the external model is bullish, even if the internal shows that we can go down 20, 30, 40 pips, it doesn't mean you should be trading it. And the reason why is because if the external model is bullish, right, then what we should be doing is we should be paying attention to the external model, because this is the deal right here. This is how you avoid yourself being in a trade for too long, right? And this is the thing. Yeah, if you look over here, price has created this retracement. I'm expecting price to sweep here, and that's fine. All right, but now I'm risking the possibilities that price is going to blow through this order block and continue north, and then respect that area, and then continue north, and then start coming back down. So once we go ahead and sweep liquidity up here, here's the highest sitting up here. So the issue here is that there is external push here, and so this is actually a really risky trade to short the market here, because there could be a chance that we may not get down to that level and price just blows through that PD array. And so what I should have done is done this. I should have said, hey, what is the distance from there to there? And I've worked it out. It is 30 pips. All right. So which means that if the market moves there, yes, I'll profit. But there's this low probability a high probability I might miss that. And so it's better to say, let me enter with a buy here, right? And if the market drops back down here, I will enter another buy there. Why? Well, because the long term outlook is bullish, all right? And so if you look at this internal structure here, I now question this third wave move here, right? Because if you take a look over here, you see how we had accumulation here? Then price manipulated to the downside, and now we're seeing distribution, which means we can see price coming up here to the top. If I look over here in the internal structure here, this may not be my third wave, right? It may not be my third wave. This actually, in fact, could be an internal structure. And take a look over here. Let me go ahead and pull the fibs up right here. Here we go. Wave one. Price moves perfectly in line with that. We see price come back down. Now this is wave 2 to 3 right here. There we go. And so this is where I should be expecting price to move to before I start seeing a sweep. So this is right here. There it is. I'm expecting now this internal structure to look like this. Let's get my fibs right here. And this is what it looks like. 1, 2, 3, 4, and 5 here, right? And then at that point, then I'm going to see the market come back down and chase after this. So my external, remember we said that we were on the south side of the curve. We're moving now to the buy side of the curve, taking out this. So therefore my external model is bullish, and then trading these, taking on the short right now. Shame on you, Gary. All right, got this one wrong. Well done, Cameron. You got me right there. You're absolutely right on the money when you went and broke down the New Zealand CAD. The long-term bias, or the external bias, is bullish. That is the right way to trade, guys. That is absolutely the right way to trade. Got this one wrong. Slap on the hand. I'm probably going to feel it on this trade. So this is Cameron's going to beat me up on this trade. Now, who knows? It's Friday the 13th. All right. I said it's the Friday the 13th is actually a lucky day for me. All right. It goes all the way back when I was in high school. I did not study for one of my exams, my end year exams. I was just partying and didn't want to study. came to the day on that day, and I still walked away with a B. All right. And that was absolutely crazy. It was geography. I don't know if you what is that here in the US, Cameron? What is geography in the US? Is it geography?
Geography?
Yeah,
What?
you don't even know what that is, right?
Yeah, that's like geography. It's like the where the location, countries, and
Yeah. So, do you guys have that in high school? Do you guys do that in high
yeah.
school? Oh, okay. All right, cool. Well, in any case, Karen's been out in high school for 10 years, so he doesn't even know about that. But yes, if I didn't study, got a B, and it was on Friday the 13th, and a lot of other good things happened on Friday the 13th for me. So this might be a payout for me. I might just get lucky on this one and get this one payout. So we'll see. Uh, Now, traders, you don't want to trade on luck. You want to trade on skill. And that is not a skill trade right there. I've made a mistake. I definitely made a mistake on that trade. All right, traders. Well, that pretty much wraps up the session for today. Hopefully, you guys enjoyed the session. Definitely going to go ahead and run a lot more of these sessions as well. Make sure you guys are subscribed to the channel. Do us a favor. Do us a huge favor. Even though you're not involved in Traders Network Club in any one of our subscriptions, make sure you reach out to us, talk to us about something that you are interested in. But also, more importantly, traders, show your support on what we're doing here inside this YouTube channel. Share this video, subscribe to the channel, go ahead and smash the like button, send a comment to us, let us know how you're enjoying the sessions. And we're going to continue to do this, drive education, drive trade opportunities, and just give you guys a good experience overall. So, with that being said, traders, we love you. We appreciate you. Without you, this is not possible for us. And we just thank you for being here. And we'll see you guys next time. This is FxBigDog and Cameron Sanchez.